Still from my soul. Good evening. Good evening, everybody. Hope you guys are doing great. Good evening. Welcome to yet another live trading session with myself, Isaac Izy, your host, and I am happy to have you here. All right, as we are about to start, let me just quickly give a few more minutes to more people that are coming in. Let's quickly let people come in. Today. We're not having any issues whatsoever. All right, we are live. Let's go. Okay, great. Good evening once again. Good evening. Welcome to our live trading session, the last one for the month of November. It's the last one for the month of November. On Thursday, we are having one on the Telegram channel. So if you are not on the Telegram channel, please do make sure that you do join in. All right, please make sure that you do join our Telegram channel. I believe the link will be pasted in the comment section there. Please make sure that you do join that. We're gonna have a live trading session on Thursday. This coming Thursday, we'll be having another live trading session. However, on YouTube, this is our last one for the month of November. So we'll resume next week, Monday. I believe next week, Monday, we're gonna have another session on YouTube. So yes, man, I hope you guys have been enjoying the trading sessions that we've been having. I hope you've been enjoying the webinars. I hope you've been learning. I hope you've been taking the trades. Man, I hope we just all been making money. I hope, we've all been profitable. I hope our trading is getting better. All right, if we do have people here that are not joining us for the first time, if you have attended any of our sessions before, please, I'd love to know what you think of the sessions so far. Do let me know in the comment section. Has it helped you? Do you think we can do better? Your feedback matters to me, so that I know that when I come here, I give you something that is more valuable to you, that changes or rather improves your trading, that makes you more profitable. Yes, I'm excited to know. Please do let me know if you are in the comment, if you are here and you've attended our sessions before. Has it helped you in any way? I'd love to hear your testimony. Have you made money using the strategies that we've been teaching you? Please do let me know in the comment section. I would love to know. All right, I would really love to know. Has the signals that we've been sending in the Telegram channel, have they brought you any profitability? Have they made your life better? I would really love to know. All right, so yes, do let me know in the comment section. Okay, welcome yet again. Welcome. Before we proceed, there's a few things that I just need to do in terms of what do you call, I have to give out a few let's quickly go into that. A few disclaimers. Disclaimer number one is that any opinion, any news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as general market commentary and does not constitute as investment advice. All right, if you do seek any financial advice, if you do seek any investment advice, please make sure that you speak to a regulated entity or a regulated key individual, but the regulatory body in your respective country. All right, whatever we discuss here is just general market commentary. All right, while we are on that, please do let me know the country that you are watching from. Please let me know your name, your country, and whether you're a beginner or you are an intermediate trader. I see we have Zairal Azar, my man. Ha 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 to you too. I don't know what you're laughing at. We got Fred Shotted all the way from Nigeria, watching from Nigeria. Welcome. Where in Nigeria are you tuning in from? Do let me know your country. Do let me know your city. Let me know your name, and let me know where whether you're a beginner or you are an advanced trader. All right. So let's get down right to it. The signals on the Telegram channel has always helped me, but my first time joining the live trading session. Okay, great. We are happy to hear that the signals in the Telegram channel do help you. We are happy to hear that. We're gonna keep them coming. Just stay in the Telegram channel. The link is just above in the comment section. Stay tuned. Keep it coming. We're gonna keep them coming. We're gonna make sure that we don't stop. And it's only gonna get bigger. It's only gonna get better. We're gonna send more. We're gonna send more tips. We have so much in store for you. So do stay tuned. All right. We have Fred all the way from Nigeria. He's a beginner. We have Linda. I see Linda. I've seen you in our previous sessions. Please do let us know. Has our sessions helped you before? Has it been profitable for you? Do you see any changes in your trading? Do you have any issues that you need help with? Please do let us know in the comment section. We have Azar all the way from Malaysia. It's 1 a.m. in Malaysia. You should be sleeping, but I admire your resilience to stay up and learning. That is what successful people do. That's the price we pay for success. All right. Before the end of the session, I'm gonna give you a bonus promo code. All right, at the end of the session, you're gonna get a promo code to get 100% deposit bonus on your first time deposit, so you can maximize your profit potential. All right, so stay tuned till the end of the session. I'm gonna be giving you a promo code that you can only use once to get 100% trading bonus. All right, great. We have Ronald Osborne all the way from Cape Town. We have Hector watching from South Africa, Johannesburg. Shout outs. We have Ronald says, I'm an intermediate trader. Okay, great. Ronald, have you attended our sessions before? Hector, have you attended? Please let me know if you have attended our sessions, and if you have, do let me know exactly how we have helped you become a better trader. And if it's your first time, do let me know what are your expectations of today's session. All right, and before I proceed, let me just give you guys a quick introduction of myself. My name is Isaac Izy. I'm a professional forex trader with a decade of experience. Before becoming a professional trader, I was a salesman. I was working in corporate, so I'm basically from a 9 to 5 to a professional forex trader, and I've trained over 5,000 traders throughout my career in trading. I have held more than 300 Forex seminars throughout the Southern African region, and we teach and train individuals to become professional traders and to succeed financially. That is our mission, that is our vision, and that is our goal. All right, that's basically what we do. That's what I'm here for. I'm here to teach you and to train you to become a professional forex trader, and also see how I can help you to become successful financially. All right, that is our goal. All right, so before we begin today, just figured I should do a bit of an introduction of forex terminology, because I noticed that a lot of people that come here beginners, and sometimes I may get carried away in using the forex jargon. So I think it's important that I just do this. If you know what this means, please bear with me. Let us we were once all beginners, and we also didn't know, and somebody had to teach us. So stay with me while we teach other people. All right, Linda says, I can't wait to exit that 9 to 5. Hopefully we'll be getting there soon. But we only get there once we have become consistently profitable. We do not gamble with our livelihoods, okay? We only get to that point once we've seen that we are consistent in our trading and we can easily maintain our lifestyle through trading, and that's when we can decide to exit the 9 to 5. All right, Forex terminology. All right, number one is, if you hear me saying to go long, or we are going long on a currency pair or whatever, on Nasdaq, whatever instrument that we are looking at, if I say we are going long, that means we are buying, okay? If I say to go long, it means we are buying. If I say to go short, it means we are selling, okay? To go short means we are selling. All right, if you hear me say a bullish market, it means it's a market that is moving in an upward direction. That means it's in an uptrend. The market, if you hear me saying the market is bullish, or we're looking for a bullish bias, if you just hear me saying bullish, that means the market is moving to the upside. It's going to the upward direction. All right, bearish, the market is moving in a downward direction. It means if you hear me saying we are bearish, we are going bearish, or we are in a bearish market, or we are in a bearish trend, it just basically means that the market is moving in a downward direction, okay? And if you hear me saying bulls, just basically means buyers. All right, bulls is buyers in the market. All right, if you hear me saying bulls have the bulls are strong, or the bulls are exhausted, or something, whenever I mention bulls, you just know that I'm talking about the buyers. And the reason for that, if you've watched National Geographic, you will notice that whenever bulls fight, they will fight from upward to from downward to up. So they go down up with their horns, right? That's what they do, right? So it means they go from down to up. All right, that's what bulls do. That's how they fight. So that's why even in the market we call buyers bulls, because they're buying from the bottom going to the top. All right, and if you've seen bears, how bears fight is a bear will fight like this. So we'll go from up to down, we'll go from up to down, and that's why we call them bears. So bears, we're going from up to down, we are selling. So bears are sellers in the market. So if you hear me saying the bears are exhausted, or the bears are too strong, it just basically mean buyers in the market. All right, and then if you hear me saying a ranging market, it means that the market is either moving upward or downward. It's a market that is moving sideways. It's a consolidating markets. All right, and if you hear me saying trending market, it means that is a market that is moving in a specific direction. It's either going up or down. But when you hear me saying the market is trending up or the market is trending down, it just means that the market is moving in that particular direction. All right, are we together? Great, let's move on. So today we're going to be discussing quite a few basics. So we're going to be discussing one, understanding market structure. Number two is we're going to be understanding trend lines, and number three, we're going to be talking candlestick confirmations. All right, candlestick confirmations when it comes to our entry points and our exit points. That's what we're going to be discussing today. We're discussing market structure. We're going to talk about market structure, internal market structure, so people understand uptrends, the characteristics of uptrends, downtrend, internal market structure, all of that, the phases of market structure, break of structure, change of characters, and all of that. We're going to be discussing that today. Number two is we're going to be understanding trend lines, the importance of trend lines and how to use them. All right, and number three, we're going to talk about the importance of candlestick confirmations for the purposes of exit strategies and entry strategies. All right, that's what we're going to be discussing today, so stay tuned. At the end of the session, I want you to be able to know the characteristics of the market, what to look out for in a certain trend, when to buy, when to exit, when to know when the market has invalidated your what you call your speculation. All right, that's what I want you to know by the end of the session. And obviously, most importantly, I want you to be able to get sniper entries, precise entries with little to no drawdown. That's what I want you to achieve by the end of this session. Is anybody ready? If you are ready, please give me some fire emojis. Please give me some dollar emojis in the comment section. All right, make sure that you do give me that. All right. Guys, I can somebody confirm my visibility, because I see on my phone here it's like I'm just a bit blurry. Am I too visible, or is it my network? What's going on? Can somebody just confirm if I'm nicely visible? Right, and if you guys can hear me clearly. All right, can somebody just do that in the comment section for me? All right, great. I see some fire emojis right there. Boo, 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 boo. All right, let's talk. Let's get right down to it. All right, so today, like I said, we understand the market structure. We're going to be talking uptrend. We're going to be talking downtrend. We're going to be talking internal market structure. We're going to be talking retracement and pullbacks. We're going to be talking reversals and change of direction. That's what we're going to be talking about today. Keep those fire emojis coming. Keep those dollar emojis coming. Let's get right down to it. So let's get to it. So what I'm going to do today is we're going to do it a little bit different. All right, we're going to go straight into the charts. All right, we're going to skip the theory. We're going to skip the present. We're gonna get right straight into the chart, so you are able to identify everything that I'm showing you straight on the chart. Let's get right down to it. All right, so we said we're discussing what? Market structure. So we're gonna talk first of all an uptrend. So we gonna let's quickly let's look at Euro USD. We're gonna have a look at an uptrend, and then we're gonna have a look at a downtrend. All right, and after that we're going to look at what we call internal market structure. All right, we're going to quickly go on a 4-hour time frame. Nope, no, I'm not placing a trade, buddy. There we go. Okay, let's keep it coming. Let's keep them coming. All right, so we have actually I saw a nice downtrend. Okay, here is an uptrend. All right, we do have an uptrend over there, and then we do have a downtrend over here. Okay, so let's look at this uptrend, and then we're gonna look at that downtrend over there, so we can understand the characteristics of an uptrend and a downtrend. Let me quickly see if we can. Nope, can't use that. We can use the period separators. All right, let's talk uptrends. So what are the characteristics of an uptrend? Two most important things that you need to note. All right, is what we call higher highs. All right, and then higher lows. All right, and I'm gonna explain in a bit. Is it only mine that's blurry? I see mine is also blurry, so I don't know if it is the network, or can somebody because I see Lindy says mine is also, because I'm checking on my phone here, it's also a bit blurry. Can people confirm if I'm also blurry on everyone's screen? Because I see the whole screen is blurry, so I don't know if it's my network or what. All right, while I'm waiting, can we please just confirm if I am blurry? Because if it's blurry, then it defeats the purpose. Because I'm checking my settings here seems to be fine. My network seems to be fine as well. My Wi-Fi seems to be okay. but I can see it's very, very blurry. Let me speak to the moderator quick and see if let's quickly see. Is it blurry? Because then you need to be able to see what I'm doing here, because if it's blurry then you can't. If it's blurry then you can't. Can somebody, it's now blurry. Oh boy. I'm trying to check my settings here. My settings seems to be fine. I can see it clearly says so. Probably it's because maybe we might have load shedding right now, probably, but I don't think. Try zooming in the screen. I don't think that is the issue. It's just the whole thing is blurry. I do apologize on that. Moderator, can you please confirm on your side? All right, we'll zoom in on the screen because I was just seeing everything else is blurry. So I'm just quickly gonna check on my other laptop, on my other device, how it's looking. All right, maybe if it's the data from, it's just the whole thing is blurry. I do apologize on that. Moderator, can you please confirm on your side? No, it seems a bit fine here. On my other screen it seems a bit fine. No, it's on this side it's fine. I think it's just on my phone. Okay, we can proceed. All right, so as we're talking uptrend market structure, right, the most two important things is a creation of higher highs and higher lows. All right, how do we know we are in an uptrend? We see our higher highs being broken. All right, so we see a series of higher highs being broken. All right, we see a series of higher highs being broken. All right, and what do we mean by higher highs? What do we mean by higher highs? Basically, what we mean by higher high, I'll just write it here. Higher high is equals to a high that is higher than the previous high. That's what a higher high is. In simple terms, for those who don't understand, a higher high is a high that is higher than the previous high. As you can see, we have a high here, and then we have that high. It's a higher high because it's higher than this one. And then we have this high over here. All right, we have this high over here. It's a higher high because it is higher than that previous high. And then we have that one over there. We have that high over there. Why? Because it's higher than this previous high. And then we have this one over here. Why? Because it's higher than this previous high. All right, so that is what we refer to as higher highs. And then higher lows. All right, I'm just quickly gonna do this. By higher lows we mean, just gonna write it now, HL, we mean a low that is higher than the previous low. All right, it's a low that is lower than the previous low. As we can see, we have a low over here, and this one is a higher low because why? It's higher than this previous low. All right, and then we have this high over here that is higher than that previous low, that one there that is higher, that one there that is higher, and so forth. All right, do you guys see that? So we have this low that is higher than this one, we have this low that is higher than this one, that low that is higher than that one, that low that is higher than that one. So in a nutshell, for a an uptrend to be valid is that we must have a series of higher highs and higher lows. All right, we must have a series of higher highs and higher lows. You can take a screenshot of that. All right, that's what we want to see in an uptrend. All right, so we know that the market is trending up. So if the market is trending up or it is a bullish market, we know that we are looking for buying opportunities. All right, so in an uptrend, we look for buying opportunities. Beautiful. All right, in an uptrend we're looking for buying opportunities. All right, we can all see that, right? Where do we buy in an uptrend? It's important to know where we buy in an uptrend, and we're gonna get to that when we get to the confirmation, the exit and the entry strategy. All right, so the best place to buy in an uptrend, all right, it's important that you know this. The best place to buy in an uptrend is at the higher lows. Do we all see that? The best place to buy in an uptrend is you want to buy at the higher lows. All right, so now market structure is that in an uptrend you'll have a high that gets broken and the market creates another high, and the market will come and create another low. The truth, or rather my English is depleting right now. I literally lost the word that I'm looking for. Okay, let me look for it. The only way we know that the uptrend is still valid is that the low will have a series of higher lows. All right, it's not breaking the previous low. All right, although sometimes we can have a higher high, but this low can come and break the previous low. That means we are not really in an uptrend. All right, that uptrend is not valid as yet. It's not been confirmed. It is confirmed by a creation of higher lows as well. All right, so the higher lows are the ones that confirm that we are still in a uptrend. All right, the higher highs are good, but the confirmations are what? Our higher lows. So as we see over here, we had a high that was broken, we created another high, and then we had a low. All right, and then we had almost an equal high there, and then we had another low. We eventually had a higher high, we had a low, we had a higher high, we had a low. That is basically how you spot an uptrend. And as I said, you want to be looking for buying opportunities. All right, you want to be looking for buying opportunities in such a trend. Okay, are we together? Do we understand the characteristics of an uptrend? If you do understand the characteristics of an uptrend too, please do give me some fire emojis, some dollar emojis. I have a question. High, low, confirm. We try to buy, but market not give chance to buy. So what I do, we're gonna get to that. I'm gonna show you guys what to look out for. You don't just wait for a low. There are things that you need to look out for. There are key levels that you need to look out to. There are candlestick confirmations that you need to see before you take that buy. All right, we're gonna get into it. Right now we're just discussing market structure for you guys to understand what makes an uptrend, what makes a downtrend. All right, so now we discussed what? An uptrend. Let's quickly go to a downtrend. All right, I actually feel we should maybe just open up another Euro USD, so we don't mess that up. Let's quickly go to a downtrend. What time frame are you using there? We're using an H4 time frame. Let's quickly go to an H4 time frame. Let's look for a nice downtrend over there. All right, now we have our downtrend over here. We have our high there, we have our low there. As we can see, the market is trending down, the market is bearish, so we have a high. All right, so we were in an uptrend and then the market changed direction. All right, there was a change of director. We have another high over there. All right, and I'm gonna name them now so you know the difference between an uptrend and a downtrend. We have another high over there, we have another high over there, we have another high over there. All right, another high, another high over there. All right, we have another high over there. Okay, and then we have another low. We have lows. All right, we have lows, we have lows, we have lows, we have lows. All right, what's happening now? Sorry about that. I thought I've just been. We have lows, 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 and then we have lows. All right, all good. Right, now on the uptrend we said we have higher highs and higher lows. Now in a downtrend we have what we call the lower highs. Lower highs. All right, we have lower highs. In an uptrend we have lower highs. Right, we have lower highs, we have lower highs, right. And then we have lower lows. Right, lower lows. Then I'm gonna explain to you guys in a bit what is the difference and why do we call them such. So next time you see them happening in the market, it's easier for you to spot these bad boys and you are able to know when you want to what you are in. When low or high, confirm the market to match our way. How we find opportunities, kindly reply. I'm not sure I understand your question. Please do rephrase your question and then I'll make sure that I answer your question. Okay, characteristics of a downtrend. We're talking market structure. All right, first of all, we were in an uptrend. We see we had a high there, then we had a bit of a change of character. Okay, I missed that high over there. All right, we call them lower highs. Why? Because they are lower than the previous high. Let me quickly all right, nope, we call them lower lows, lower highs, because a lower high is equals to a high that is lower than the previous high. All good? But did I do? Yeah, man. A lower high, it's a high that is lower than the previous high, and then we have a lower low, right? A lower low is a low that is lower than the previous low. That is lower than the previous low. Doesn't make sense. All right, so for a downtrend we have lower lows, lower highs, and lower lows. A lower high is a high that is lower than the previous low. As we can see, we had a high, then we had another high, but it's lower than that one. All right, we had another high that is lower than that one, then we had another high that is lower than this one, then another high lower than that one, another high that is lower than this one, another high that is lower than that one. Do we all understand that? Then we also have lower lows. Lower lows, it's a low that is lower than the previous low. So we had our first low over there, and then we had another low over there. We had another low over there that is lower than that one. A low that is lower than that one. A low that is lower than that one. A low that is lower than that one. Low that is lower than that one. Low that is lower than that one. And that is basically the characteristics of a downtrend. We want to see a series of lower lows and lower highs, and how how a downtrend is confirmed by what? Lower highs. We can still have lower lows, but we want to confirm by lower highs that we are still in a downtrend. All right, so we want to see a series of lower highs. We want to see a series of lower highs happening. All right, confirming that we are still in a downtrend. All right, so in a downtrend, we look for selling opportunities. All right, so whenever we are in a downtrend, we want to look for selling opportunities. All right, secondly, the best place to buy, the best place to sell in a downtrend, the best place to sell is at the lower highs. Let me just write that down. Lower highs. All right, the best place to sell is at the lower highs. You want to take your sales here, not at the lower lows. All right, you want to take your sales at the lower highs. All right, when the market creates lower highs, that's where you want to take your sell. All right, why you not explain candle by candle how? Please be patient. I did say we are discussing market structure. We're going to discuss internal market structure, then we're going to discuss candlestick confirmation. So please be patient. One subject at a time. Please be patient. Patience is a virtue for a forex trader. If you don't have patience as a trader, you shouldn't really be trading, because you're gonna have a big problem. Trading is a business of waiting. So please be patient. We're gonna get to that. We don't just pass things. We're gonna get straight right into it. We build up, get to that, and then you can understand fully. Stop looking for shortcuts. I did say that I'm gonna discuss that. Okay, thank you. All right, so as I said, market structure, we had an uptrend, we discussed an uptrend, we now have a downtrend, we are discussing a downtrend. All right, from that we're going to discuss internal market structure. From internal market structure, we're going to understand trend lines. From trend lines, we're going to get into the candlestick confirmations, what to look out for here at the lower lows, at the lower highs if you want to sell, what to look out for at the higher lows if you want to buy. That's what we're gonna get right into. Okay, are you with me? If you understand, please do give me some fire emojis in the comment section. All right. So as I said, we have our series of lower highs in a series of lower lows. We want to see the market creating lower highs and breaking lower lows. All right, that's when we know that we are in a downtrend. And we said that in a downtrend, we're looking for selling opportunities, and the best place to buy is at the lower highs. That's the best place to buy. Do we have any question concerning do we have any questions concerning concerning market structure, concerning uptrends and downtrend? Do we have any questions? All right, can you please confirm we have any questions? This is the let's quickly do that. This is a downtrend, and that is a uptrend. All right, that's what you want to look for in an uptrend. All right, that is an uptrend, and this is so in an uptrend we said we have a series of higher highs and higher lows, and we want to take our buys at higher lows. We want to see a break of higher highs. All right, and in a downtrend we have a series of lower lows and lower highs, and we want to buy at lower highs, and we want to see a continuous breaking of the lower lows to confirm that we are still in a downtrend. All good? Perfect. All right, now let's move on to internal market structure. Let's quickly see our next chapter is, we discussed uptrend, we discussed downtrend. All right, so now we're going into internal market structure. We're now going into internal market structure. Let's quickly open up another Euro USD. Let's quickly get the template changed. All right, so we are still looking at uptrends and downtrends, market structure. What we want to see is, what we want to look at now is the internal market structure. All right, we're gonna go back to our uptrend that we were looking at. All right, which one we were looking at, I believe, is this one. All right, let's look at that. Let's quickly go on a 1 hour time frame while we're on that. Where is that uptrend now? We're gonna quickly put the red line over there, the beginning of that. Then we're gonna go on a 1 hour. There we go. All right, remember now, please, I don't know how to use a time frame. You want to learn how to use a time frame. You're gonna get to that. I'll explain just the difference. Okay, maybe let me just do it now. All right, so the importance of time frame is, first of all, let me start it by this way, right? What we see here, this so-called candlesticks, is data that we get from the market. All right, we use these things to speculate. This candlestick, we have bearish, we have bullish candlesticks. If you are here at the beginning of the session, you'll understand what I mean by bearish and bullish. All right, we have the red ones and then we have the blue ones going up. All right, so these things, they give us data. All right, the higher the time frame, the bigger picture of the market you see. The lower the time frame, the more in detail data you get of what is happening in the current market. Like for instance, if you go on the MN, it means it's a monthly time frame. That means that every candlestick will represent a month. All right, by candlestick we mean this bad boys over here. All right, this bad boys. So from here to there is a session that I did on understanding candlestick anatomy, so you understand the body, the wick, the open, the close of the candlesticks. All right, the high and the low and all of that. We did discuss that, so please make sure that you watch some of my previous sessions so you can understand in more detail. So every candlestick based on the time frame, it will represent that time frame. So for instance, if I said we are on you can see that it shows me it's a monthly time frame. So that means one candlestick represents 1 month. So it will take 1 month to open and close. If we go on W1, it will show me that one candlestick represents 1 week. So it will take 1 week for one candlestick to be formed. By formed, I mean open and close. And if we go to D1, it means a candlestick will take 1 day, all right, 1 day to open and close. We go to H4, it means each candlestick represents 4 hours. So it will take 4 hours to open and close. H1, that's what we are on now. It means all of these candlesticks, they all represent 1 hour. So from the open and close is 1 hour, 2 hours, 3 hours, 4 hours, and so forth. All right. And then M30 is 30 minutes, M15, 15 minutes, M5, 5 minutes, M1, 1 minute. So that means one candlestick will represent 1 minute. All right. It takes 1 minute to form, to open and close. That's what time frames are for. All right. So now if you want to get a broader perspective or a bigger picture of the market, you want to look at the higher time frames, because they give you the bigger picture of the market. You get to know the trend. You get to identify whether we are in an uptrend or we are in a downtrend. All right. That's what time frames are for. And then if you more of a day trader, you want to look at the smaller time frames, all right, just to get more in depth, more detail of what to, especially for looking for entries. Once you've gotten the bigger picture of the market, you can refine all the way to a smaller time frame to find entries on a smaller time frame. I hope that makes sense. But like I said, go back to my previous sessions. You will see in more details understanding candlestick anatomy, understanding time frames. All right. So we're discussing internal market structure. So we were looking at an uptrend over here. All right. We're looking at an uptrend. We see a series of higher highs and higher lows. All right. Now on the same uptrend, you will notice, let me just quickly do that. Okay, we have an uptrend going up there. You will notice that we have a bit of a downtrend inside the uptrend. Can we all see that? Although the market is going up, but there is a bit of a downtrend there. There is a bit of a downtrend there. There is a bit of a downtrend there. This is what we refer to as internal market structure. All right. So this shouldn't phase you. All right. That's why we also need what you call higher time frame, so we can see our lows and our highs. All right. So if you can look there, this obviously had an internal market structure. There was an internal market structure there, but the overall we had a higher low and then we had a higher high over there. So if you go back over here, we can see and the market was giving us a series of, so again, let me show you. So our previous low is here, our main low. All right. And our high, our previous high was there before that. It was broken, all right? You see that? It was broken, tested, and we went to the upside. Now the market came back inside here, but didn't get to our low, all right? So that's why I said it's important that we note, all right, confirmation of an uptrend is the higher lows. If the higher lows are not broken, we are still in a uptrend. All right, if the higher lows are not broken, the previous low has not been broken, we are still in an uptrend. So in an internal market structure, you'll notice something like that. All right, this is just what we call a retracement. This is what we call a pullback or a correction in the market. As we all know, when the market moves, it doesn't go up or it just doesn't go down. It moves in a zigzag pattern. It moves in something like this. So even in a correction or even in a retracement, we will see something like that, and that's what we call internal market structure. That should not phase you. All right, that should not phase you at all. All right, what you want to see is the previous low being broken. All right, you want to see the previous low being broken, and that's why higher time frames are more important, because if you go on smaller time frames, you will notice a whole lot of what you call higher highs and higher lows over there, of which they are also still valid, but The most important one was which one? This one, because it's from a higher time frame. We had a low there, we had a high there, we went up, this low was not broken. All right, we had a low there, it was broken, and all of that on a smaller time frame. There's just too many no's. But if you go on a higher time frame, you'll understand why it's important for us to use higher time frames to confirm the trend. All right, so we don't get kicked out or we don't get confused by the internal market structure. Do we all understand internal market structure? All right, so we'll quickly go on a downtrend so you can also see the same thing. Where is that downtrend? There we go, there we go. We are in a downtrend, but you will see a series of lows and highs, lows and highs. So I'm just trying to quickly see where we can get a nice one, a proper internal market structure over there. Which one were we using? Which one did we use? Okay, we used this one over here. This is the one that we used. All right, so we were in a downtrend, as you can see over there. That's our downtrend. All right, and the market is going down, but we see that we have now a series of higher highs and higher lows, higher highs, higher lows, higher highs, higher lows, higher lows, and eventually the market, boom, went all the way down. This is what we refer to as internal market structure. All right, this is internal market structure. As you would notice, our high was there. As you can see, that high didn't come anywhere near close that, and then we had another high over there. So as the market goes to create a lower high, it will also, you will have all right. I think someone is not very patient today, but it's fine. We will it's all right, it's all right. Let me leave it there. Let me leave it there. I don't know if you don't understand English or you just choosing to be stubborn, but let me leave it there, because I did say I'm going to explain candlesticks. All right, I'm going to explain candlesticks, confirmations. All right, so yes, we have a high there, and then in that downtrend we also have an internal market structure where the market is creating a series of higher highs, higher lows, higher highs, higher lows. All right, and then it confuses people like Sajid here. They start thinking, oh no, there's a change of character. Oh, you get what I'm saying? There's a change. No, don't be confused. This is just an internal market structure. All right, we want to see the previous major high being broken to see that we now, in a uptrend. So that's just internal market structure. When the market is retracing, when the market is pulling back, or the market is correcting, we will most of the time see that internal market structure. So don't be confused by it. All right, so that is why you see now a lot of people will be trapped in a buy thinking that we are buying, and then boom, they get taken out by that as well. You see, same thing here. We have higher highs, higher lows, higher highs, higher lows, higher highs, and then boom, the market goes all the way down. We see that over here. High lows, higher highs, higher lows, higher highs, higher lows, and then the market, boom, takes out people over there. So that's, you will see a lot of that, and especially on smaller time frames. But then if you go on a higher time frame like we are looking here, it's easier to just spot the highs and the lows. All right, do we understand? Do we understand? Do we all understand? Can I move on? Oh no, I think we've taken too much time today. All right, we spoke internal market structure. Let's quickly talk pullbacks, all right, and retracements. All right, so it's important again to understand that as the market goes up, as the market goes down, we'll usually have four phases, and I've talked about them. We usually have what we call a consolidation phase. All right, you can go to my previous sessions, we've discussed that. We'll have an expansion phase. All right, so for instance, we'll have a consolidation, we'll have an expansion, we'll have a retracement. All right, a retracement is what we call a pullback or a correction. All right, so as I said, that is important that we understand that, because a retracement is basically where we want to start looking for our entries. All right, especially if you are in a downtrend. Remember, I said the best place to sell is at the lower highs. All right, so if we are in a what you call in a downtrend, you want to be looking for sales, correct? Right. You want to be looking for sales. All right, so how do you want to look for sales? You want to look for them at the lower highs, correct? So what you do, like I said, you may have what we call a consolidation phase. All right, you have a consolidation phase, then you'll have what we call an expansion. An expansion is a break out of the consolidation, or an impulse move into the direction of the trend. So let's say, for instance, we had this low over here, and then we had this expansion to the downside over there. So it expanded, or it was an impulse move to break that previous low. All right, after the break of the previous low, we'll have what we call a retracement. So that means it's a correction. The market is correcting. All right, the market is pulling back. What you want to look at, firstly, you want to look at your nearest lower points. All right, at your lower point, you want to look at your nearest key level. Our nearest key level there is 10,400. All right, our nearest key level is what? 10,400. If you don't understand what key levels are, please do refer to my previous session, and you'll understand why I chose the number 10,400. All right, so we can see over there, this was our low. All right, and it was broken to the downside, and the market started retracing. So when the market starts retracing, we want to look at our nearest key level that is closer to our previous low in a sell. In a sell, you wanna, if you're looking for a sell or in a downtrend, you wanna look at your previous low, your nearest key level to your previous lower low. All right, that's where you want to be taking your entries. And as we can see, the market broke down and came back exactly there at 10,400. All right, market came exactly there. That's where you take your what, your sell entries. You go down, boom, look at that drawdown. The market dropped all the way, and it came back to test that level again, came back to test it again, showing that it is a strong zone. It is a strong resistance zone, a strong key level. All right, faked out a bit there, but eventually what did we do? We went all the way down. All right, do you see that? Do you see how you look for entries in a downtrend? All right, and as we can see over here, we have a low. All right, we're gonna look for our nearest key level over there. Our nearest key level there will be 91200. 91200. All right, that's our nearest key level. All right, next to our previous low. All right, and then we broke the low eventually. Once we broke the low, what did we do? We came back to 09200, our key level, and that's where you take your entries. All right, at that lower high, you take your entries all the way to the downside. Boom. Do you see that? You guys see that? We took our sell entries over there. Boom. All right, we broke the previous low. All right, you wanna, and then the market went all the way down, came back up to retrace again, retrace near our key level 09200. You've taken your sells. The market, boom, breaks this low. All right, we see the break of the low again. We do the same thing. We place we look for our nearest key level there. So our nearest key level there will be 800. All right, will be 07800. That's the price that we're looking at. All right, market broke. All right, actually no, because we have this low over here. We want to look at the nearest one to this low over there. not that one, this one, because this is the one that was broken. All right, after going there. So our nearest one is 7207. All right, so we want to look for entries over there. All right, market broke this low. All right, we wait for a retracement, a pullback towards what? Towards our key level. See that it just missed by a few pips, but again, that's closer. You should have taken that trade. All right, and then what did the market do? Boom. Because you also see the perfect entry of perfect retest of this low over there, retested, and the market went to the downside. All right, the market broke that low over there. We want to look for another low. All right, our key levels over there is 800 00. All right, it's the nearest one. All right, so the market came, tested it, went down a bit, but then it retraced all the way back there. You might actually be kicked out in your stop loss, but eventually the market comes back down to create another low or over there. All right, and then goes all the way down, comes back to test it, goes all the way down. So that's what you do when you're looking for what? For sells in a downtrend. That's what you do when you're looking for sells in a downtrend, just using key levels as well as the test of your lower lows. All right, it's the test of your lower lows, creating lower highs. That's where you want to take your entries, also in confluence with the key levels. All right, now that's in a downtrend. Let's quickly look in an uptrend. What do you want to do? We have a high over there. All right, that's been broken. All right, we want to see what's our nearest key level over there. Our nearest key level is 07400. All right, let's look at that over there. All right, we see that market broke to the upside, came back, tested that area. We said but the best place to buy in an uptrend is at a higher low. How do you know it's a higher low? It has tested your previous key level, which is your higher high, and also your key level. Where do you enter? You entered 07400. We go all the way up with it. All right, market broke that. All right, and then we see what's our nearest key level over there. We have 90250. That is also a nice key level, but we can use 200 for the sake of double zeros. We can use 200 for our entry. Market broke, tested there. All right, came back inside, didn't give you a proper structure, gave you all right, all right, so we have a bit of a pattern over there, a reversal pattern, which is an inverse head and shoulder. Market went up to the upside, came back to test that low over there, and that's where you take your entries to the upside, and then boom. All right, do you guys see that? So please send my request to Octa FX team that organizes YouTube. We don't want live trading sessions. We want education of real SMC price and time theory with Martin Awense in December. There is education, sir. Please just open your eyes and open your eyes for notifications, and you will get those notifications for all the webinars, educational webinars and live trading sessions. But your concern is noted. All right, so do you guys see how we spot those higher highs and higher lows entries in an uptrend and a downtrend? Do you guys see that? All right, so now let's quickly look at Euro USD current price right now. Let's see if we are in an uptrend. Let's quickly go on a 4-hour. Let's see if we can spot any entries over there. All right, so we can see that we are currently in an uptrend because of a series of higher highs and higher lows. All right, let's see if we can get our next entry over here. So we have a high over here. That is a higher high that has been created because it's higher than the previous high, and our previous high was over here, right, which is actually already been tested. So we already see that it's been tested. Let's see what is our key 80900. That's our key level over there. All right, this is where you wanted to take your buy entries. This is where we should have taken our buy entries to the upside. Did you see that? So now all right, so as we can see there, market broke this previous high over there to the upside. All right, came back and tested that area over there. We had a bit of a drawdown, but eventually this is where we took our price all the way down near. We said this is our higher low. Oh no. Do apologize on that. I had sorry guys, I had load shedding over there. Yes, we are back now. I'm sorry guys, I had load shedding over there. If you want education, please pay attention to your emails, pay attention to the YouTube channel. All the information is being given over there. If you do want any sessions, they are there. They are there. They are always there. Go back into history, or you can just easily pay for a mentor. It's as simple as that. All right. We want such entitlement, but okay. As I said, we see that's why we should have taken our entry for Euro USD to the upside. You'd be nicely in profits over there. So what we want to see happen, we want to see this high being broken, and we want to check what is our nearest key level over there. All right, 9600. 9600, that is our nearest. All right, so we want to see a test, market break into this upside, coming to test this, creating another high, coming to test here, rejecting this area over there, and going all the way to the upside. That's what we want to look at currently. All right, and let me see. As you can see, same thing. I'm currently in a sell trade on a, this is on our copy trading. This is on our copy trading. So we are in a downtrend on USD JPY over there. We have a low over there, all right, which is 900. All right, you see 900 is exactly where I took my sell. Why? Because it's my closest, it's my closest, what do you call? It's my closest key level next to there. So we have a high over there, a lower high, all right, over there, and then we have a lower low over there. All right, correct. All right, and we've broken that. All right, so that's my nearest key level over there, and then boom, we go into the downside. So that's what you want to look at. So that's why I took that sell entry, and that is also a high risk entry. But what you want to do is you want to see this happening. All right, you want to see this happening. Remember I said you want to wait for a retracement, and then you want to see that happening and going to the downside like that. That's what you want to look at. All right, so that is basically what I'm currently looking at. You can look at that as well, take that trade if you want to. All right, and as soon as we get a confirmation entry, I will send the signal in the Telegram channel. Because of time today, I'm gonna end here. Next week we'll complete using trend lines and round numbers and all of that. We're going to understand candlestick confirmations, we're going to understand breakouts and retests, we're going to talk about key levels and RB numbers, and then we'll be finishing this session. As I promised you, I'm going to give you guys a promo code. All right, I'm going to give you guys a promo code to double up your deposit. The promo code is Isaac Izy. All right, take advantage of the promo code in 5 simple steps. Number 1, you just need to fire up your Octa trading app or visit the official website. Number 2, you go to your profile. Number 3, you go to the promo code section in the menu. Number 4, you enter the promo code and press activate. Number 5, you make a deposit and enjoy your bonus. All right, that is the bonus for your 100% trading bonus. That is your promo code for your 100% trading bonus, and that is Isaac Izy. All right. And do we have any questions? Do we have any questions? All right. Do we have any questions? Do we have any questions before I close? Do you have any questions before I close? Do we have any questions? I don't see any questions, so I believe we are all good. I believe we are all good. Okay, that's it from me, guys. I hope you guys did learn. I hope you guys enjoyed today's session. I really enjoyed it. All right, and I hope I will see you guys in the Telegram channel on Thursday. Hopefully we'll have more opportunities to take over there, and I'll see you guys next week, Monday, 7 p.m. sharp Central African time, and we're gonna be discussing the other stuff that we didn't get to finish today, so I'm looking forward to that. Okay, hope you guys understood internal market structure so you don't get confused by it. So I know a lot of people get confused by internal market structure and they think that no, the direction of the trend has changed. No, it hasn't. It's just what we call internal market structure. That's basically part of our retracement phase. Okay, so you want to look for a retracement towards your lower high, towards your lower low, all right, or creation of a lower high. In a downtrend, you want to look for a creation of a higher high, in a uptrend, all right, and you want to be buying at your higher lows in an uptrend. All right, that's what you want to be looking at, and you want to buy at your key levels, your closest key levels. That's where you take your entries. All right, how do you get key levels when wanting to place a market? Please do watch our previous sessions, all right, on the Octa YouTube channel. All right, please click like, subscribe, all right, notification bell. Okay, then go on the Octa YouTube channel, go look at the sessions that I've done. There is a whole webinar discussing key levels, the importance of key levels, how to how to plot them, and all of that. Please do make sure that you watch that so you can have a basic understanding. Key levels are the most important factor of my trading strategy. That is where I get sniper entries in the market. All right, so also again, stay tuned and pay attention to USD JPY. Let's look at how it plays out. If you want to enter, I did show you guys where you can enter the trade. All right, and then but also if you are in the Telegram channel, I believe I did send I actually did send this signal when it was still somewhere. It was at price 149,300. 149,300. I sent this signal when it was still somewhere there. All right, you see, yes, when this signal was still somewhere there, that's why I sent the signal. So if you took that signal, you should be in nice profits right now. All right, we just continuing with it to the downside, but this is where I sent the signal. I believe that was last week. I can't remember last week when. I think last week Thursday or so. So please stay tuned on that. Please stay tuned. Let's see how it plays out. Patience is a virtue when it comes to trading. It's all about waiting for the right market. All right, guys, thank you so much for joining in today. I hope you guys had a great time. I hope you guys enjoyed today's session. I'll be seeing you guys on Thursday on the Telegram channel live trading session. Again, if you do need if you do need education, there is a lot of free educational content on the Octa YouTube channel. So make sure that you don't just make requests, you actually go and find information that is easily available, that is readily available for you, with you just making demands of things that are already there. So don't do that to yourself. Go into the Octa YouTube channel. There is thousands and thousands of hours of free educational content, so make sure that you watch that, watch my previous sessions as well, watch the other speakers sessions as well. Find what works for you, okay? And let's finish the year with a bang, man. From me, it's been an absolute pleasure hosting you today. See you guys next week. That's it from me, guys. Cheers out. I love you so much, and remember, Jesus loves you. We'll see you guys next week. Cheers.